Earlier, and Andrew and I were talking about this issue of stake-taking by sovereign wealth funds. The Chinese sovereign wealth fund, the China Investment Corporation, is taking a 15% stake in Noble Group, the commodities and resource trader, for $850 million. Valerie has more details on what this issue means. Val, afternoon. What does the CIC hope to get out of the purchase other than, I don't know, having access to more commodities?
Well, CIC has said in March that it wants to put more money in undervalued commodity assets after losing money on financial firms like Blackstone Group and Morgan Stanley. And its latest $850 million baby, Noble Group, has been doing well in the markets. Noble's shares has more than doubled this year, gaining 125%, making it the fourth best performer on the Straits Times Index. Trading has been suspended in Singapore, but overnight in the US, Noble's shares tumbled almost 13%, mainly driven by its stock sale to CIC at a discount of more than 8% to its recent trading price of $1.60. The new shares on market also, of course, dilute current stockholder value. But here's what analysts are recommending: 9 buys, 2 holds, and 2 sells. Noble says it plans to put the money raised in more investments in agricultural raw materials. Trading on Noble stocks in Singapore has been suspended till Wednesday. Back to you, Benny.
All right, and just a programming note, the Honorable Richard Ellman, founder, was kind enough to give us an exclusive FaceTime tomorrow on the show at the same time, so make sure you tune in 24 hours to this very show. Our man of the hour, though, is Dr. Ferris from BNP Paribas Wealth Management. Since we were just coming off the commodities track there, may as well talk it through.
Absolutely.
Yeah, where are we with that stuff? Do you want to be in this stuff?
Well, the answer is yes, where, however. Hard commodities, iron ore, bauxite, nickel, okay, tend to be cyclical, of course. And since most likely the GDP growth of the G3 economies, United States, Europe, and Japan, is going to be very, very timid, very modest in the year to come, and possibly in the next couple of years to come, and I can't possibly be hugely bullish. However, on the soft commodities, particularly food, we have the interesting development whereby demand, there is very little. There is very slowly, it's not cyclical, and we have pressures on supply. Therefore, prices are much more likely to be sustained on the soft side or on the hard side. And what we're telling our clients is, on a relative basis, we prefer the soft commodities to the hard commodities.
That was kind of an, you know what, I mean, I don't mean to oversimplify things.
Simplify it. Why not?
Yeah, keep it simple, right? Stupid, that's what my mom taught me. It was kind of an intuitive thing, wasn't it? I mean, you will have industrial ebbs and flows. You know, arguments over who has the rights or who has the dibs on what deposits in the middle of whose country, but you know, the populations are growing. I mean, you know, this is the old Jim Rogers argument that you will have drops and ups and downs, and you know, if you can't handle the heat, get out of the kitchen and all that. But the trend line is intact, isn't it?
The trend line is intact, but it grows very, very slowly because, of course, food covers a hell of a lot of both let's say, sins and virtues. Because it's one thing to say there's a huge shortage in almonds. Well, you know, this is hardly kind of, I'm just making this up, this is hardly an event which is going to shake the world. But if somebody says, you know, the production of rice is expected to continue to decline in the next 5 years, I'm just making this up again, this has got much more significant implications for both the CPI indexes in Asia and also, of course, for the food that people are eating. So I have to separate the things very, very carefully. Again, and if we're looking at corn, if we're looking at wheat, if we're looking at rice, if we're looking at soybeans, all right, we're looking at completely different things as opposed to looking at nuts or spices, okay, or tea or coffee. I'm not suggesting they are better or worse, but they are different classes of food. Because like people saying, as people get better off, they eat more. Well, the answer is no, they don't eat more. They eat different things, which is altogether different. So in 20 years' time, I will be much more concerned about frozen orange juice and frozen sort of chicken in Asia as opposed to what's happening to rice, which incidentally, remember a year and a half ago, we were all going to die, there will not be enough rice, there will be riots in the streets. Well, it just didn't happen, did it?
Yeah, they do eat more when Fatburger finally lands on the neighborhood corner, but that's a different story here. This is the right entry point for a viewer in Canada, just judging from his handle, because he's on the TELUS network here. Kent writes in asking, do you feel, Dr. Ferris, that China's continued purchase of industrial commodities is true reflection of their improved productive capacity, or is it all a sham or scam, any way you want to call it, and they're just storing it up? it's inventory buildup, not actual drawdowns and usage. From Canada.
We have to separate two things here. Has there been in Chinese inventory building? Absolutely, okay, because particularly in the case of copper and to some extent in the case of nickel, if I was to do an audio visual, if I was to look at their inputs, they have done that. In other words, they have really picked. So it was not really necessarily related to cyclical.
Yeah.
Now, the notion that the Chinese are stockpiling for strategic or naughty purposes, my God, every single economy I know of has strategic stockpiles of important goods. So I don't think the Chinese are stockpiling in order to corner the market, in inverted commas, because they're doing it openly. So the some aspect of that, I'm not quite sure if I would use the word, but I will not say that, hey, we are now on a cyclical uptick of Chinese buying a lot of commodities because the economy is accelerating. I most definitely will not say that. And therefore, the expected impact on some of the hard commodity prices is not necessarily, let's call it, benign. It doesn't mean that, hey, they will continue to go up.
Well, the assumption is that they have a use for it because they wouldn't just make big piles of it for the hell of it. But unfortunately, with commodities and industrial raw materials, you can't operate on a just-in-time inventory basis.
Absolutely. Also, let's not forget, all major economies have got up to 3 months stockpiles of oil. And, you know, nobody says, well, they're preparing for war. No, they're preparing for any disruption. They're preparing for an emergency, and they're preparing for a sharp uptick in the demand for oil. Okay, and that's why they carry substantial inventories.
Yeah, well, on a very, very practical level, you know, we don't like keeping a lot of junk in the house here in a place like Hong Kong where our storage is so small. But who wants to run out for a roll of toilet tissue every time you want it? That would really be a death throne there.